Hi, everyone. This is Alex Contreras. I am a program analyst with the U.S. Small Business Administration's Office of Disaster Assistance. And I am going to be talking with you today about the SBA's Disaster Loan Program. Just to kind of get started, in case you needed some background information about the agency, SBA was created in 1953 as an independent agency of the federal government to aid, counsel, assist, and protect the interests of small business concerns, to preserve free, competitive enterprise, and to maintain and strengthen the overall economy of our nation. So that's the general mission of the agency. But what a lot of people don't know is that the SBA also has a disaster assistance mission. And the SBA's disaster assistance mission is to provide low-interest disaster loans to businesses of all sizes, private nonprofit organizations, homeowners and renters to repair or replace real estate, personal property, machinery and equipment, inventory, and business assets that have been damaged or destroyed in a declared disaster. Looking back, since 1953, SBA has approved over $53 billion to over 2 million businesses, homeowners, and renters following some of America's worst disasters. On this slide, we have a list of some of the largest disaster events that SBA has responded to. The largest ones in recent history have been Hurricanes Katrina, Rita, and Wilma, or what we call the Gulf Coast hurricanes from 2005, where we provided over $10.9 billion. After that, it was the Northridge earthquake from 1994, where we provided over $4 billion, and most recently, Hurricane Sandy with over $2.5 billion. So when we talk about SBA's disaster loan program, you can break it down into three primary categories of assistance. There are the physical home disaster loans, there are physical business disaster loans, and then there are economic injury disaster loans. And the economic injury disaster loans, which we'll go into more detail, are working capital loans. So they aren't necessarily for businesses that sustain physical damage. They can be used for those businesses as well, but a business that didn't have any physical damage to its structure or any physical losses could get economic injury for its working capital needs. So starting with the home disaster loans, SBA provides up to $200,000 to homeowners to repair or replace the disaster-damaged primary residence. And additional funds can be used or are available to homeowners if they need to refinance an existing mortgage or if they want to do some type of mitigation measure, for example, elevating the structure, doing storm shelters, something of that nature, elevating utilities that might be down in the basement from future disasters of the same kind. So a key point in that, though, is that the $200,000 that's available in the home disaster loan program is for the primary residence. And so if you have a rental property, even though it's residential, that might actually qualify under SBA's business disaster loan program, which we'll cover in the next slide. So in addition to the $200,000 for real estate repairs, SBA also provides up to $40,000 for personal property losses. And so this can be used to replace appliances, furniture, even vehicles that have been lost or damaged in a declared disaster event. The terms of the loan, they can go out as far as 30 years, and that's intended to make the loan affordable, so that keeps the monthly payments down. But it doesn't necessarily automatically go to 30 years. It's based on what the applicant is able to repay. So in some cases, you might have a 15-year loan. In other cases, you might have a 30-year loan. The interest rates are kept low, typically between 2 and 3% for borrowers. They are fixed interest rates, but they are adjusted quarterly. But if you qualify, once you are approved at that interest rate, it will stay fixed for the life of the loan. But each disaster event will have its own applicable interest rate based on the quarter in where the disaster event occurred. And as far as collateral goes, home loans over $25,000 are secured to the extent possible, but SBA is not a collateral lender when it comes to disaster loans, so if you don't have collateral, then you won't be denied a loan for lack of collateral. For example, we can provide a $40,000 loan to a renter for personal property losses, no collateral needed. Or a homeowner, we could provide up to $25,000, taking no secured lien on the property. But if it's over $25,000 and they have collateral available, typically as real estate, then we would require them to pledge that property as collateral in order to obtain the loan. Moving on to the next slide, the business physical disaster loans. SBA can provide up to $2 million for businesses of all sizes and private nonprofit organizations to repair or replace business physical disaster losses, including real estate, machinery and equipment, inventory, furniture and fixtures, and leasehold improvements. So this is important because many of you are already familiar with SBA and the guaranteed loan programs that we provide for small businesses, but SBA's disaster loan program is actually available to businesses of all sizes. Another thing I should point out about the disaster loan program is that it's SBA's only direct loan program. So these aren't guaranteed loans, these are direct loans from the federal government that we're providing, and SBA also services the loans. So just like the home loan program, terms can go out as far as 30 years, and that is intended to keep the loans more affordable. Low fixed interest rates, typically 4% for businesses without credit available elsewhere, and 6% for businesses with credit available elsewhere. Again, interest rates depend on the specific declared disaster event, and those interest rates are fixed depending on in which quarter the event occurred. As far as collateral goes, it's the same $25,000 threshold. Loans over $25,000 must be secured to the extent possible, but again, we won't decline somebody for not having enough collateral or having any collateral. And the third category of disaster loans that we provide are the economic injury disaster loans, or for short, we typically refer to them as EIDL loans. Again, we can provide up to $2 million to small businesses, small agricultural cooperatives, small businesses engaged in aquaculture, and most private nonprofit organizations. The one thing with the economic injury disaster loans, though, is there's a $2 million statutory limit that applies to both the EIDL and the physical disaster loans. So a business who is applying for disaster loan assistance can't get more than $2 million from both the economic injury and the physical disaster loans. In other words, they could get $1 million for physical losses and up to $1 million for economic injury, or they could get $2 million for economic injury if they're eligible for it, but they wouldn't be able to get any more for physical damages. So there's a $2 million legislative limit that applies to both. Again, there's a 30-year term and the low fixed interest rates. Also, for collateral, EIDL loans over $25,000 must be secured to the extent possible. So this is actually separate from the physical disaster loans. So a business who's receiving physical disaster loan assistance and economic injury disaster loan assistance can get up to $25,000 unsecured on both. In other words, they could get up to $50,000 if it was a combination of the two unsecured. This is actually a nice change that we've had in the last few years, I'd say, because it used to be $14,000 for physical damages and $5,000 for economic injury. That was the unsecured threshold. And what this does is, by increasing it up to $25,000 for both, it allows us to disperse funds much quicker and a higher amount of funds, so that way those businesses can start to get their recovery underway much quicker, which in the case of a disaster recovery is really, really important to the economy, the local economy there. So the quicker businesses can reopen or begin, bringing their employees back to continue the payroll, then the quicker that local community can recover, and it's just better for everyone. So, but if you're only able to disperse up to $5,000, and then you have to wait until a business can submit all of its paperwork in order to get the subsequent disbursements, it has the potential to slow down the recovery somewhat. So those are the three categories of disaster loan assistance. Next, I'm going to cover what we call the three-step process, and these are the, kind of as a high level, the steps that you would take to obtain an SBA disaster loan. So in the very first step is applying for the loan. So there's three ways that you can apply. You can apply online, in person at one of our disaster recovery centers, or by mail. So a disaster recovery center are temporary locations that we open following a disaster declaration. If it's a presidential disaster declaration, that's and then you have, that's declared by FEMA. FEMA's out there. They open what they call disaster recovery centers in coordination with the state. SBA always has customer service representatives in those disaster recovery centers. If it's an SBA agency declaration where it's not a presidential, but it's an SBA agency one, SBA has its own authority to declare disaster declarations, we'll open what we call disaster loan outreach centers. And then also in certain cases, we open business recovery centers. So at those centers, we have staff that are there available to help people complete the application. We have an online disaster loan assistance portal that applicants can use. What they do is they go online, they create a registration, they start their application. They can pause at any time and save their spot there and continue it later, which is really good for people. We found that upwards of 90% of the applications we receive are done through the online portal. And that's really because if you can imagine the environment after a disaster, people can be moving around. You've lost all of your belongings. You may be out of your home. Having the ability to do a paper application and having all of the documents you need there while you're doing it in the center is not always the best option. It may not always be convenient for them. So having the online option, we found that a lot of applicants have been using that because they can start, stop multiple times, come back to it, and they have an online record of what they're applying for and what documents they've submitted. And so it's just much easier. So again, businesses can borrow up to $2 million for physical damages, up to $2 million for economic injury. Homeowners can borrow up to $200,000 to repair or replace damage to the primary residence, and homeowners and renters can borrow up to $40,000 to replace damaged personal property. And so this first step is really critical in the disaster recovery process because following a disaster declaration, SBA is out there usually within 1 to 2 days on the ground, opening centers or staffing centers that are being opened by FEMA in the state. We're meeting with local officials, we're meeting with the media, we're doing outreach, trying to inform people about SBA's disaster loan program and the benefits of applying. And sometimes that can be our biggest challenge, really, is getting over the excuse me, the challenges of encouraging somebody to apply for a loan to incur additional debt at a time when they've suffered financial losses and there's a lot of uncertainty. But the best thing about the SBA disaster loan, or a really good thing about it, is even if they qualify, they're not required to accept the loan. There's no cost to them to apply, and so it's a good peace of mind to know if you do qualify, what's available to you. And so what we always tell any disaster survivor, whether they're a homeowner or they're a renter or they're a business owner, is when you're navigating through the disaster recovery process, you want to know what your options are. You want to know what assistance is going to be available to you, and you need to know, if there's a cost or what the pros and the cons are of using that assistance. And so a lot of people are hopeful that their insurance is going to cover their losses, but you don't want to wait until you've gone through the entire insurance process only to find out at the end that maybe it doesn't cover your loss at all, or maybe it only partially covers you and you still have a large amount of unmet needs or uncompensated losses, and then you are going to start to apply for the SBA disaster loan. And SBA disaster loans, typically the application period is 60 days, and so if you wait until this day 60 to start the application process, you have to go through the loan processing part with your loan officer, and you might add another 1 to 2 weeks there in order to find out if you're even eligible, when you could have done that all at the very front end and been able to make that decision right away and been ready to rebuild as soon as the funds were available. So we always encourage everyone, at least, if you've been affected by a declared disaster and you've been referred to the SBA, apply, see what you're eligible for, and then you can make a better informed decision about whether or not you're going to use the SBA disaster loan funds to help with your recovery. So the second step is verifying the property, verifying the losses, and loan processing and making a decision on as far as credit goes. So whenever we get an application, the first thing we do is we do a review for credit, and then it goes to the on-site inspection to verify the losses. So the credit check is part of our automatic business rules, and so we instituted this change back around 2005, 2006, and it's meant to help speed up the process, because in a presidential disaster declaration, the very first step that disaster survivors are asked to do is to register with FEMA. FEMA then takes the information that they collect through the registration process, and any applicants over a certain household income will be referred to the SBA, and the ones below a certain household income threshold will be kept within FEMA's grant assistance process. But the ones that are referred to us, we then ask them to apply, and if they apply, we do a credit check, and if the credit shows that there's some major issues and we wouldn't be able to extend credit to them, or likely wouldn't be able to, then we can decline the application for unsatisfactory credit right away. It's what we call an automatic decline for credit, and refer them back to FEMA to be considered for additional grant assistance. And so this applies only to the home loan applicants. But this helps speed up their recovery process, because rather than waiting for them to go through SBA's loan underwriting and then only to determine they're not qualifying for a loan, then referring them back, you might have slowed down their process a couple of weeks. And after a disaster, homeowners and renters, they want to get back on their feet as quickly as possible. And obviously we don't want to be the ones to stand in that way, so we found ways to streamline the process. But for those that are past the initial credit check, and we then will begin to evaluate their ability to repay the loan, we'll look closer at the credit and see if they can afford the payments, and then make them an offer as far as extending credit. So the loan officer determines the eligibility during processing after reviewing insurance and other recoveries also. So one thing that I said before is that we were encouraging everybody to apply as soon as possible. A lot of people will say, well, I have insurance, I'm going to wait and see. Well, SBA can actually disperse funds on an approved loan before insurance claims have been settled. And what we do is if the insurance is approved or a claim is being paid later on, we'll have an assignment on the insurance proceeds. So the insurance money that's considered to be a duplication would just go to pay down the SBA loan. But at least you are able to inject those SBA funds into the rebuilding or your reconstruction project. That way you can get it started sooner, and it just means you'll be able to get back into your home or your business that much faster. Our loan officer works to provide all the necessary information needed to reach the loan determination, so they're working with the applicant to provide whatever information we need. And our goal is to come to a decision on the application within 2 to 3 weeks. And I can tell you that really depends on the amount of workload that we're dealing with at that time. You know, right now, we don't have any major catastrophic disaster events that we're working through. But if we're, say, immediately after something like Superstorm Sandy, we would probably be telling people you're going to be looking at maybe a little bit longer than 3 weeks. I would try and give them an accurate assessment as to how long they can expect the application process might take. But right now, average processing times are well below the 2 to 3 week time frame. So, and then the loan officer contacts them to talk about the loan decision, next steps, and what other information we might need. Just an example, if we approve your loan, there could be some stipulations that come along with that, like the requirement to obtain flood insurance. So if you have a home that was flooded, we're going to require that you carry flood insurance for the life of the loan. Or if the property that you're using as collateral or that we're rebuilding is located in a flood zone, that's federal law that we require you to have flood insurance. And then the third step is SBA prepares, this is for the approved loans, SBA prepares and sends the loan closing documents to the borrower for their signature. Once the loan closing documents are signed and returned to SBA, we're typically making the initial disbursement within 5 days. And so that means up to $25,000 within 5 days of signing your loan closing documents. And that is usually a great start to start getting the reconstruction project underway. Also, if they have any flood insurance money or homeowners insurance, hazard insurance money, that would also been used to help get the reconstruction project underway. Case managers work with the borrowers to help meet all the loan conditions and subsequent disbursements needed to receive up until they receive the full loan amount. And loans can be adjusted after the closing just due to changing circumstances. So example, you know, you might find damages that we didn't discover upon our initial inspection, and the cost to do the recovery is going to increase. We can increase the loan as long as we can get some contractor's estimates or things to show, to substantiate the need to increase it. So SBDC's assistance in a disaster. So SBA, obviously, we're just one part of the recovery process. We rely on our partnerships to help offer, you know, a wider variety of services that might be needed. So small business development centers, SCORE offices, women's business centers, they really help provide a lot of other services to businesses that SBA's disaster office can't really offer. So, you know, our main mission is to provide the disaster loans and to make sure that people get the help they need in applying for those and get the funds out to them as quickly as possible. But there's a lot of counseling and management, technical assistance that we just, you know, that's not really our expertise in offering. So we partner with SBA's resource partners to help provide that. And Also, they have a tremendous amount of knowledge about the local communities and what the needs might be, and maybe pockets of industries that we need to reach out to, and we need to maybe tailor our messaging to, so that way they understand how the disaster loan program works. So working with SBA's resource partners is really important. The technical assistance follow-up. So SBA, when we have businesses that have applied and don't qualify, we refer them back to SBA's resource partners, the Small Business Development Centers, SCORE, Women's Business Centers. And the way we do that is we will contact them, let them know whichever resource partner is in there is nearest to them, and inform them of the services that they provide, remind them that those services are free and are available to them, so that way they can look at, you know, getting business counseling services, or maybe even help in appealing a decline decision. We get a lot of applicants who, you know, might be right there on the bubble as to whether or not we can extend the credit. We might have to decline it. They didn't quite meet the repayment needs, and so they can work with one of the resource partners to maybe prepare some projections or things for the business, and come back and appeal our decline decision, and you might see that we can, in the end up approving the application. So the resource partners are also good for helping with that. In the past, we've heard from our resource partners that they are really anxious to get more information about the SBA disaster loan program, more details. And so while we can't share everything about how we underwrite loans, because what we really don't want is, you know, our partners, even though they're well-intentioned, looking at somebody's application and saying, well, I wouldn't waste your time because you may not qualify, and in the end, you know, maybe SBA could have done the loan. But we do want them to have information about the program, so that way they can really be ambassadors for us out there and encouraging people to apply. But what we did was we created a reference guide to the SBA disaster loan program. Here is the link. Occasionally, from time to time, we update it when we have some process improvements or some regulatory changes to the program. So last updated back in May 2015. We'll probably be updating that in the near future. But here's a link to the reference guide. Back in 2015, there was something called the RISE Act. There's a couple of things. I won't go over these really because I want us to have time to get into some questions. But there are two sections that directly impacted the resource partners from the RISE Act. One was disaster awards to resource partners. So it gives SBA the authority to provide financial assistance on a competitive basis via grants, contracts, and cooperative agreements to SBDCs, Women's Business Centers, and SCORE to spur disaster recovery and growth of small business concerns located in a presidentially declared disaster area. No matching funds are required. And then assistance to out-of-state businesses. So this authorizes the administrator to allow an SBDC to provide advice, information, and assistance to a small business outside of the state without regard to geographic proximity to the SBDC if the small business is located in a presidentially declared disaster area. SBA must permit SBDC personnel to use any site facility that has been designated by SBA for use to provide disaster recovery assistance. And so the out-of-state business part is really meant to allow those SBDCs to pull resources from nearby or other jurisdictions that can offer the help. As before, there was kind of a state boundary issue where they couldn't pull those resources in, even though the other SBDCs were more than willing to provide their services and their help. So this is just allowing them, freeing them up to come to each other's aid. And so the next slide here is, so this is contact information for the public. This is our customer service center, and this is where anybody who's been affected by a disaster, impacted, we would recommend them to call. So this is our 800 number, 1-800-659-2955. We have an email, disastercustomerservice@sba.gov, and then of course our website, sba.gov/disaster. So this is just for the general public. where they can get good information, or if they've actually applied and they want an update on their status of their application, they can call the customer service center number. They just need to have their application number or maybe social or address, something we can do a lookup with in order to get the status. But if you are one of our state partners or one of our resource partners, we have other contacts for you to reach out to. And SBA has 2 field operations centers, one in the east and one in the west. The one in the east is located in Atlanta, Georgia, and it covers federal regions 1 through 5. So if you are located in federal regions 1 through 5, you would contact FOC East, and there's a contact for them right here, Michael Lampton. He's the supervisory public affairs specialist. He'd be your contact there if you're looking to find out maybe about a specific disaster declaration or how something is declared or the status of a pending declaration request, or just other program information. Or maybe you might want to reach out to them and ask them to come do some training or briefing or something for your staff. If you're in federal regions 6 through 10, you would reach out to Rick Jenkins in Field Operations Center West, which is located in Sacramento, California. And we also at headquarters have a liaison between SBA's Office of Disaster Assistance and the Office of Entrepreneurial Development. Her name is Sandra Wursler, and you could contact her directly as well. There's a contact for her down here in the lower right-hand corner. And also, again, the customer service center number would be for anybody in the public, but this could also be for yourself if you're just have a general question, not sure if it needs to go to our Federal Operations Center or to Sandra, the liaison. You can start at the customer service center for sure, and those always sometimes always get back up to us at headquarters. So that's always a safe contact to use. And so this is our last slide, and I can go into some questions now. We have one that I had prepared here, and it was, how can the resource partners help with SBA's disaster recovery mission? And so I thought it would be good to kind of explain what we do once we get on the ground, and then at what point do the resource partners really step in to help out. And so I mentioned after a disaster declaration is made that we get people on the ground right away. They start doing outreach, and one of the outreach or some of the outreach that we do is with resource partners. And so we will visit, contact all of the resource partners that are in a declared county. And so that could include visiting the office, giving them materials to hand out, doing a training or a briefing for their staff, supporting them with materials that they can share electronically with their distribution lists, just to spread the word about the availability of the disaster loan program. But another thing that the resource partners do in return, though, is they sometimes offer office space to our program. And so, like I said, we open disaster recovery centers in the local disaster areas. And for SBA's part, we're always looking for space that we can use at no cost, just because we operate on a pretty streamlined budget. So we're looking for space that's especially for the business community, that they can come into, have a nice consultation with one of our customer service representatives about the application process. And the resource partners are always really great about helping us identify those locations. Sometimes it's actually in their office space. Sometimes it's just them knowing the local communities and helping put us in touch with you know, a place that's accessible to everybody. And so they are really helpful at doing that. Another question we get a lot is, how long is it going to take for me to get my money? I kind of covered that in a little bit already, but our goal is 2 to 3 weeks to process the loan, and then once we receive the closing documents, we make an initial disbursement within 5 days. But that's for the initial disbursement. So usually what we do is the remaining funds that we do them incrementally in disbursements based on how the reconstruction project is going and when the applicant or when the borrower needs the funds. And so we'll ask them to provide us with receipts of how the already dispersed funds have been used and contractors' estimates showing what the cost is. And so we don't just disperse all of the funds at once, they're done incrementally. And so that can be a little bit longer process, but it really depends on the availability of contractors, the availability of supplies, how quickly they're able to get permits and things, and even their own decision-making timelines, because we have a lot of homeowners and businesses that are maybe, instead of just rebuilding right back at the spot they were, they might looking at a new location because they can use their SBA eligibility to purchase in a structure or build in another location. So sometimes they are a little more thoughtful and might need a little bit more time, and we're more than willing to give them the additional time they need. So that's why I always tell people also, it's not always the best gauge just to see how quickly SBA is funding all of the money out there. There may be a lot of uncertainty as to whether or not disaster survivors are going back to that same location. We hope that they are going to go back and, those communities will be rebuilt as quickly as possible, but, sometimes it's not always the best decision for them, and they might need to make kind of change course, and we sometimes see them doing that after we've approved the loan even. And so SBA always tries to be really flexible in giving them that ability. So I'm going to, I think, go through and see if I can find any additional questions here, I guess. So I'm not seeing any yet. Somebody did say that they had a chance to work with us after Superstorm Sandy, and that it was a good experience. That was good. I thank them because we did a lot of work with the folks up there. I can just kind of go over some of the things that have changed about the program recently. One other thing from the RISE Act I'll just add before we conclude is SBA provides assistance to do mitigation assistance. But it's been expanded now to include safe rooms, which wasn't within our ability to do before. SBA loans were strictly meant to repair or replace things that were damaged by an event. And we found that a lot of people, especially after tornado damage, wanted to build a safe room on their property, but since it wasn't there before, SBA funds couldn't be used to do it. And so they've since changed the Small Business Act to include safe rooms or storm shelters as a type of eligible mitigation measure. So now an SBA loan can actually be used to build or install a safe room even if it wasn't there before the disaster occurred. So that's something that I think depending on where, I see we have a lot of attendees, depending on where they're at, we get disaster declarations in areas that are highly prone to windstorm damage or tornadoes. So that'll be of good interest to them. And the way it works is they're eligible for up to 20% of whatever the verified losses were that SBA came up with. And so, part of the application process, SBA has its own inspectors that go out to the property come up with a dollar amount of what it's going to cost to repair everything. That's what the SBA's verified loss is. For mitigation measures, we can do up to 20% of what are the total verified losses were for physical damages. So, you know, just an example, if it's $100,000 a loss, we could do $20,000. That's great. You know, we can do $20,000 worth of mitigation measure for somebody that might really need it. Looks like we just had another question. Somebody asked about the military reservist economic injury loan program. And so that's a really great question. So SBA has a ongoing declaration made for the military reservist economic injury loan program. And it's working capital that we can provide to small businesses if they have an essential employee who's been called to duty. And so this could be the owner, this could be one of their employees, but in any case, if that business has somebody who's essential to the business operation who's been called to active duty, and it's affecting their ability to meet their normal business obligations, they could apply to SBA at any time throughout the year because the declaration is always open. But they can apply to SBA to get working capital to help them, you know, continue to meet those financial obligations. And so it's not a program that a lot of people know about because it's just kind of always out there. A lot of focus tends to go to specific disaster events when they occur. But the military reservist program is really great resource for businesses that need it. You know, the example we always used to cover in the field was you had a tourism business that did helicopter tours, and the pilot is active duty reservist called away, and so they have to cut back or cancel reservations for tours that they had planned to do. And so obviously it's a business interruption, reduces the revenue, then begins to affect their ability to make to pay their other obligations. Might be lease, might be payments on equipment, it could be any number of things, but they need a loan in order to help them just kind of get through that period until operations return to normal. And that's what the military reservist economic injury loan program is for. And so I think we can close on that note, but just that's a good example of there's a lot of different ways that SBA can help in recovery, and I think it's just really important to get in touch with one of our offices to you know, find out about those, find out, you know, is there a program that SBA has. We're always willing to come to you guys to help talk about those programs, to do briefings, to do educational trainings or seminars. So, you know, please reach out to us. I think the best person to probably contact is Sandra Wursler if you're with one of our resource partners, or you can call me. And our office number is 202-205-6734. And you can email me if you have any questions. My email address is alejandro.contreras@sba.gov, and I'll spell that out for you. It's Alejandro, ALEJANDRO CONTRERAS@sba.gov. And so thank you all for listening in today and learning more about the SBA Disaster Loan Program. Thank you.